OpenAI, the company behind ChatGPT, is losing a huge amount of money. According to reports based on internal OpenAI documents, the company is projecting a loss of around $14 billion in 2026 alone. And when you zoom out, losses from 2023 to 2028 could add up to more than $44 billion, which immediately raises the obvious question: how does a company this famous, this hyped, and this widely used manages to lose that much money? Here's the thing we need to understand. Popular doesn't automatically mean profitable, especially in the AI industry. In fact, sometimes popularity makes things worse, because the more people use AI products, the more it costs them to run it. And that's a huge part of what's happening here. Every time you open ChatGPT and type a prompt, something expensive is happening behind the scenes. Powerful servers activate, high-end GPUs process information, and a lot of electricity is consumed. After that, data centers need to stay cool, and engineers work hard to prevent any overheating. Now, when millions of people use this service every single day, the cost rises very fast. Running AI models is not like running a normal website. It's more comparable to running a small power grid that just happens to think for itself. Then there's the cost of actually building these models in the first place. Training a state-of-the-art AI model today can cost hundreds of millions, and in some cases, even billions of dollars. And the wild part is that each new generation of models are more expensive than the previous ones, as they require bigger models, more data, more computing power, more everything. OpenAI can't afford to slow down either, because if they do, competitors catch up. So they're locked into this arms race, where standing still basically means falling behind. Additionally, OpenAI spends an enormous amount of research, not just tweaking existing products, but they're also advancing the field of AI as a whole. That means hiring some of the best and most expensive talent in the tech industry. These are people who could easily be making seven-figure salaries at other companies, so AI has to pay top dollar to keep them. As a result, OpenAI must offer competitive compensation packages, including salaries, bonuses, and stock options. These costs accumulate quickly. Now you might be thinking, okay, but don't they make money from ChatGPT Plus, enterprise customers, and API access? And yes, they do. Their revenue has been climbing quickly. We're talking billions per year at this point. But here's the problem. Their costs are climbing even faster than what they're making. So even though the money coming in looks impressive, the money going out is on another level entirely. There's also the investors side of the story. OpenAI isn't just operating on its own cash. They've taken massive investments, most notably from Microsoft, and depending on how those agreements are structured, a chunk of OpenAI's revenue may not even fully belong to them. Some reports suggest that partners can be entitled to a significant percentage of AI's earnings before the company ever sees real profit. So even when revenue grows, profitability gets pushed further into the future. But here's when things flip. OpenAI and its investors aren't expecting this to be profitable right now. In their eyes, this is very much a lose money today to dominate tomorrow strategy. Internally, OpenAI reportedly believes that after years of heavy losses, things could dramatically turn around. Their long-term projections suggest the company could be pulling in up to $100 billion per year by the end of the decade. That's the kind of numbers that makes investors very patient. That's Nvidia levels money. That's we don't care about short-term losses money. But here's the uncomfortable question. What if AI does transform everything, but margins stay thin because competitions keep prices low and costs high? That's when the losses stop being strategic and starts being dangerous. This is why that strategy comes with serious risk, as the current AI boom resembles previous tech bubbles. Massive hype, inflated valuations, aggressive spending, and a lot of promises about future profits. There's a massive gap between what AI can do and how much people are realistically willing to pay for it. Even AI CEO at OpenAI acknowledged that some people are going to lose a substantial amount of money if expectations don't line up with reality. When you hear someone at the top say that publicly, it certainly calls for caution. Not all AI companies are experiencing financial struggles at the same level. Some competitors are taking a more cautious approach, focusing on securing enterprise contracts, slower scaling, and managing costs tightly. Meanwhile, OpenAI is fully committed to rapid growth, introducing new models, features, and exploring modalities like video and voice, as well as potentially developing custom hardware down the line. That's interesting, but it's also very expensive. So the reason why AI is losing a lot of money is more because they're believing that they're trying to build something massive before anyone else does. They are betting that being the first, the biggest, and the best will eventually unlock profits that makes today's losses look small in comparison. Whether the gamble pays off depends on a lot of things: competition, regulation, energy cost, enterprise adoption, and whether AI demand continues to explode in the way investors expect. To conclude, OpenAI losing $14 billion sounds insane, and it is. But in the world of AI, insane spending are becoming the norm. The real question isn't how much money they're losing right now, it is whether their vision for the future will ultimately come to fruition. If they pull it off, it can be seen as historical, but these losses will be remembered the same way people remember Amazon bleeding money for years before becoming unstoppable. That's the bet, that's the gamble, and right now, nobody knows which version of history we're watching unfold.